Today in this video, I am going to show you two powerful entry techniques in trading. And as I said in the beginning of chart trading masterclass, every video you will see that some very minute points which I have observed being in market for almost 20 years and 20 years of watching the charts day in and day out. So today you will see that two entry techniques which can give you high win rate in trading. So now look at this chart. This chart is of 2nd June. So what you have done, you have marked a important resistance because this is where it reversed, and you thought once price come back to that level you will short, and you are just waiting for price to come to that level, and you have shorted on this candle. You have shorted on this candle assuming that market will go down because it is making a bearish pin bar near the resistance, and what you have done, you have kept your stop loss above this candle high, right? Because that is where it started reversing, and let us see what happened after that. So you can see that you went short somewhere in this candle and it was making a bearish pin bar near the resistance. You thought it will go down, but you can see that it went up, your stop loss hit, and then it started going down, right? It made you frustrated that direction was right, but still your stop loss hit. Here is one more example. You can see that price started reversing from this second candle, and you mark that level assuming that it's a bearish sign, and what you have done, you went by taking a short trade around this level, right? Somewhere in this bearish pin bar because it's a resistance and it's a bearish sign, right? Let us see what happened after that. You can see that it again reversed and your stop loss was above this level. This candle took your stop loss and your stop loss hit, and after that market started going down, right? So tell me how many times it happened with you that you took a short trade near the resistance, you kept your stop loss, but still your stop loss hit, making you frustrated. So how to avoid this kind of situation where you can enter at the right place so that you can avoid hitting your stop loss, and that is what the objective of today's video. In today's video, I'm going to discuss about one entry called retest entry. First thing you have to know that market never goes in a single line, right? Whether it has to go up or go down, it will always make a retracement and goes up. Even it has to go down, it will give a bounce, and that is how market works. So another thing you should remember that market have tendency to retest the support or resistance. That means, for example, if it is a resistance, then taking a short trade near that resistance is not a wrong method, right? Because candles are making a bearish candle, right? But price have a tendency to retest the resistance most of the time. That means if there is a resistance here, because this is where price bounced, next time you see that price is coming that level, and when price comes to that level, immediately you take a short trade. Price comes down, take your stop loss which you kept above the day's high, and then again it goes down. So that is what I mean to say that price most of the time, instead of going down from the resistance, it comes back again, retest that level and goes down. So that is why through this video what I want to tell you that being in market for more than 20 years, I have observed that price have tendency to retest the resistance second time most of the time. So how to know that whether market is likely to go down immediately or it is likely to retest that resistance and then goes down? So that's why what you have to do, next time when price comes to the resistance, first you need to see the candlestick behavior, because that is what the price action. Remember, don't take chart reading as a red and green candle. So this is not a red and green candle. This will tell you the strength of buyers and sellers, whether buyers are strong or whether sellers are strong. So when you see that candlesticks are making this kind of doji candle, even though body is red, there is a big wick, body is red, but there is a big wicks. So that is not a convincing way to say that sellers are strong. So that's why always look for candlestick like this. When you see candlestick with a full body, such kind of candlesticks, if it happens near the resistance, then high probability to go down. So that is why when you see this kind of candlestick near the resistance, don't jump into that trade to short immediately. Wait for this kind of full body candlestick. Then if you take the short trade, then chances of higher win rate. So that is the first type of entry. And now second type of entry is called momentum shift entry. That means, as I said earlier also, price goes up because of the buyer strength, and price goes down because sellers are strong, right? And it shows the strength of the sellers. But you should know that price can't keep going up. Buyers can't keep taking the control all the time, right? Same time, sellers can't take the control all the time. So sometimes buyers take the control, then sellers comes and price goes down. Or if it is price going down, that means sellers are strong, and then buyers will come and he start taking prices up. The place where momentum is changing from buyers to sellers or sellers to buyer is called momentum shift. So you should know where momentum is shifting, and entering there can give you higher win rate. Now look at this price action on 20th September. You can see that price is making a series of pin bar, right? Series of pin bar near the day's low. So you must have read it in technical analysis book on some YouTube videos. That means when you see a pin bar near the support, that means it is bullish. So through this video, what I am going to say that don't rely purely on pin bar, as pin bar will tell you that momentum slowly shifting from buyers to sellers or sellers to buyer. But just trading based on pin bar can't give you good trades, because look at this, you started going long here when you see that series of pin bar, thinking that price will bounce back because after the gap down opening, price is making a consolidation here with a series of pin bar. Let us see what happened after that. And you can see that price did not go up, instead price started going down, right? So that is what, just trading based on pin bar is not a good method, because it will not tell you that momentum is shifting. Instead of that, what you should do, then you should always go and look for a full body candle. Okay, full body candle only will tell you that momentum is shifting from sellers to buyers. So how to know when momentum is shifting? For that, after a down move, you should always look for a candlestick price action. So when you see this kind of pin bar, most of the novice trader, they go long here because it's a bullish pin bar, right? But I don't suggest that, because it will not tell you that momentum shifting from sellers to buyer. It can only tell you that sellers are getting weaker and weaker. Only after series of pin bar or series of doji, if you see this kind of candle, that is the place to go long. So that means what you will learn from this method, that next time when you see price comes near the support and start making a series of pin bar or series of doji, it is not a place to go long immediately. Instead, only when you see the full body candle, that is the place to go long. That is where it says that now buyers are aggressively entering the market. Small wicks is fine on the upside or downside, but always look for a body of the candle, how big or small it is, and then only you should take the trade. Okay, now look at this chart. This is the 21st August chart. Let me replay the candlestick. You can see that Bank Nifty opened here, and now price is coming near the support of first candle. So what we'll do, we'll mark a green level to know that that is the support, first candle low support, and that is where we are planning to go long, right? But what I said, most importantly, you should look for the momentum shifting only when you see the full body candle, not doji or pin bar. So let me play the candlestick. So it is making a series of pin bar. Will you go long here? Because there is a series of pin bar, you should not go long here just because it's a pin bar. What you should look for? You should look for a full body candle, right? So now replay it and let us see whether we see the full body candle near that support. And finally, this is the candle which made a full body, right? So this is the candle you should go long. So pin bar will not tell you that buyers are aggressively buying. It can only tell you that sellers are slowly losing the strength, but you should always look for the candlestick like this with a full body near the support. And this is the another example. You can see that this is the 8th of August example. You can see that on 8th of August, Bank Nifty price opened near the CPR, right? This is where CPR is. After that, price is making a big wicks, right? Price is making a big wicks. Does it mean that price is going to go up? No, right? So what I said, wait for full body candle. Let us see where we got the full body candle, and you can see that this is where we got the full body candle, right? That is the candle number 9. That is where we got the full body candle. So as per the momentum shift, this is the candle you have to go long, not on this pin bar, because sometimes after series of pin bar you can make one big red candle and price starts going down. And another thing you should remember that more the series of pin bar or doji, higher the probability of price going up or going down. So you should patiently wait for full body candle, and that is where you can get trades which have a higher win rate. So more this kind of candles you will see on the chart. After that, whenever you see full body, taking the trade on that can give you higher win rate. So that is what I wanted to discuss through this video. Two types of entry, that is the retest entry and second is momentum shift entry. So that's about this video. Let me know in the comment section whether you are liking this kind of educational videos. So if you want to learn more about price action techniques, 25 day trading strategies, then you can check my day trading webinar where I given the detail below this video. If you are interested, you can contact me on WhatsApp or email. So that's it guys about today's video. I'll see you soon with a new educational video. Until then, bye and take care.